Hey, what's going on, everybody? It's Nick from NorthCode. It's January the 7th, and today we're going to be talking about XRP. Big thank you to all of you for your support to the channel. Please make sure to subscribe if you're new and never been here before. Turn your notifications on, and liking this video is always very helpful to us to help get this content out to other people. We are a new channel, but we are growing, and I'm very, very excited, like I said in previous videos, to have this platform to be able to share my analysis with you and with all our friends in the crypto space. So once again, yes, we are talking about XRP. We are doing a bit of a deep dive from a charting perspective. We're going to be reviewing the price action from the weekly chart. We're going to zoom in on the daily chart. We're going to be going over, Fibonacci levels. I'm also going to be looking at fractal measurements. And, once again, just kind of going over these support and resistance lines. In my previous video, I had, started to elaborate more on, my ideas for XRP in terms of how I was seeing things. So we're just going to go into it a little bit more and dive in and, set out some price targets of what to expect, obviously with price going down. I think since my last video, some of the price projections on the bear side actually came through. So obviously not good if you're a bull, but it is price action nonetheless. We try to stay as emotionless as possible, given the circumstances, and try to be more logical and strategic with our ideas. So we're going to talk about XRP. We're going to deep dive on the charts right after this. All right, welcome back. So the first thing we're going to be doing is looking at XRP on the weekly time frame. And the first thing I want to bring up is this Fibonacci extension. If we just look at the price, we obviously had our bull market back in 2017, 2018, where XRP went to $3.85. Then we had a 96% retracement or crash, however you want to put it. And since then we've started to rally, and I kind of wanted to show you the Fibonacci levels, the retracement levels, just based off of where these price points have hit, and it is a little bit interesting. I'm going to start it from the candle top here. I'm going to swing across, bring it down to the anchored lows, and once again, what I find very, very intriguing here, and I'm just going to zoom in on the structure, is that price action, when it was in that consolidation range, when it finally eventually broke out, it immediately hit the 236 fib. Now, this is an extension that I've drawn in, not a retracement, but the levels I find quite amazing because price action pumped up, hit the 236 fib, came right back down, tapped the weekly 50, and started to move up along here. And as we can see, if we just keep exploring and analyzing this price action, maybe it can give us some clues as to what to expect and what to look for. Now, nobody has a crystal ball, but we can use these indicators to help us. So price action had some good support off the 20 SMA, which is this red line here. Now, the ADMA, which I have drawn in here, it's kind of like a dark blue, is carrying this uptrend. But once again, rejection here at the 236 fib, nice throwback to the 20 SMA, and then price gets fully launched. Now, regardless of whatever fundamental news or events that were happening at this time here, we can see that there was a clear rejection here at the golden ratio. And this brings up the next point of these fibs, right? These extensions and how they play a very, very key role. Huge wicks occurring here, telling us that lots of selling pressure, right? Multiple times. The first candlestick here rejected at the 0.5 fib. The next candlestick is where we have the fractal high, which went almost to about, I think, $2. I think it was about $1.96. But the candle still closed under the 0.5 fib. We had a heavy retracement then, right? Because this is bearish candlestick pattern. And we got a nice throwback to the ADMA. Price action then bounced back up, with continuation on the following week. These are not daily candles, by the way. These are weekly candles. So on the following weekly candle, and what's interesting here is we get a nice tap to that golden ratio, right? The 618 fib. And then we can start to see a collapse with another throwback to the 8. But you can start to see things are starting to round out. Now, this candlestick here on the weekly comes back down to touch the 20 SMA. Once again, in confluence, with this 236 fib. Now, from this perspective, we have a nice throwback happening here, and this is what caused this bounce. But the bounce is temporary. There wasn't enough bullish support. You can see with the volume, there wasn't enough volume to kick in to sustain. You can actually see that the volume started to decrease, which isn't abnormal, but you can see based off even the candlestick pattern, the price action rejected off the 8 EMA on the upside or the underside, and from then we can see the continuation of the downtrend in the price action, supported by the 8 EMA, ultimately finding some support off the 50 week moving average, and continuing to once again create what's known as a depth fill. And I've talked about this in the past with some other videos, but we did get support off that 50 MA. So we know the 50 weekly moving average is a very, very key moving average. The 200 is sitting right here. We'll talk about that in a sec. But price action found good support here, rounded off, and then started to pump again. Now, the thing is, when it started to pump, it was not able to successfully close above the level of about 1.3. You can see 1, 2, 3, 4, 5 weeks where price action was just in this range, created a tower top. If we zoomed in, it probably might look like a Bart Simpson move, but definitely under the 0.5 fib. It did create a lower high structure, right? We have our high here and then a lower high. When price action came back around, we have support again off the 20 SMA. So these are why I have these moving averages, because, and the exponential moving averages, because these indicators are responding very, very well on the charts, whether you're looking at it on a weekly chart or daily chart or lower time frame charts. I find that these EMAs and moving averages have been working out very, very well in response to the price action, and can help us gauge where price action is going if we utilize them in the proper way, right? Now, we obviously have to keep in mind we got to use fundamental classic analysis as well, which is our general support and resistance, right? Keep things horizontally easy and simple to understand. So as price action has come back around here, we did have support right off that 20. Now, ultimately, we're back down to the 236 range again, and this is kind of where we are at this moment. I have to just kind of analyze it this way so you understand where my headspace is at and how I kind of read things and look at things. So as we continue forward in this video, it'll make a little bit more sense as to some of the key levels and what to look for now, and what I'm looking for. So the fact that the price action is broken down now on the weekly, we've gone back under the 50 week moving average, and this is fundamentally bearish. When we consider it this way, as we've seen in the past that we've had good support off that 50 when the uptrend started here, right? And we can see that we had good support here, and now we're kind of flipping it, right? So things are starting to turn bearish in the short term. And in the previous video, I mentioned there is a wedge pattern that has formed with XRP, right? And you can map it in like this, for instance. And, while I'm not the biggest fan of these diagonal lines, I prefer using horizontal ranges. It is still identifying that, we are in a downtrend here. And it's been in a downtrend since May for XRP. So we're now sitting literally on the weekly right at the 236 fib, and price action is holding strong there still right now. We got another couple days before the candle closes. We also know that we have this wick here, right? That depth wick that takes price action down to about 60 cents. So, there is a possibility that we could see price action still fill this either this week or maybe even next week, right? We could see a breakdown here. And, this is where things are going to start to get a little bit more bearish. So something to keep an eye out when we're using these fibs are these levels. And, this is a very, very key level right now. And let me just map it out this way. So, this is our first key level is tucked in this range right here, right? Now, if we kind of go a little bit deeper into this, what I do like is that we do still have this uptrend. Now, this uptrend had formed, and once again with these diagonal lines, like we can keep kind of drawing the line like this. We can use, different anchors. And what I mean by that is, there's these different wick points here. So, we can start cheating in a way. And this is kind of why I'm not the biggest fan of these trend lines, right? Because like I could have drawn it like this, for instance, and said, well, here's our trend line and we lost it, deviation, we had support and then a breakdown. Okay, but then I can, continue to move this line over here now and say, okay, well, we had support here, and now we're flirting and now we have a breakdown here. But because of this wick here, I could also still move it like this, right? And here we go again. I could say, well, we have support here. We had a scam wick here, closed above, closed above, closed above. And now, this week we're back underneath it. So the thing is, with these lines, like, I mean, I could even stretch it this way. We can just keep moving this line to fit our bias. So it makes things tricky when, we're using our trend lines in this way and drawing wedges. From my perspective, I would try to keep it simple once again and use these horizontal ranges. So what I mean by that is, we clearly can see that, we had higher lows starting to form here, right? This is still a higher low. We're above this level here. So what that means is that as long as we can stay, above this range here, with XRP being above that 50 cents, 55 cent range, we're still creating higher lows, even though these are, lower highs being formed here. From a bigger picture, from where we are still creating these steps. Even if price action were to dip here, right, into this range, it would still be, technically sound of a flip, right? Similar to what we saw here, right? Everyone was screaming where, XRP is dead. I remember back, when this was happening here and even down here. But the reality is, it's that, we had a nice bounce from this level. So in the event that, from a weekly perspective, and, we're talking weeks here for this to play out, but, if price action were to dip below here, I'd be anticipating a move back into this 50 cent range. So it's a very, very key level to look at. We could see, once again, just if I just map it out, if I just draw this out for you, if we were to lose this level, we could see something like this form, and then we have our bounce at that point, right? So breakdown and then a bounce. And then at this point, it'd be very interesting to see what's going to happen next, right? Because do we have another bounce this way, or does price action move up here and reject? It's hard to say at this point because we just need a little more data. But, looking at the moving averages, things are turning bearish. We're seeing bearish crosses starting to form, and this could lead to consolidation in this range. Which, like I said, it's still not necessarily a bad thing in terms of, a bull cycle from a bigger picture. It just means that, things are going to take some time. The cycle is definitely lengthening, and, these candlesticks, which are weekly candlesticks, are going to take time to play out. So, by the time we get out here, we're talking already February, potentially, right? For this all to potentially play out, whatever is going to happen here, whether we hold support here or whether it dips lower, as we just look at the from a time analysis piece, we're looking at, definitely into February here, unless something drastically happens. Maybe there's some fundamental news that gets dropped that, helps with XRP's price. One of the biggest things that come to mind is the lawsuit, right? Maybe the lawsuit gets settled with Ripple, and that could trigger a bullish explosion in price action, right? Especially if it's good, if it's good news, right? However, if it's bad news, that could send price spiraling. Now, the other thing I just want to make note here with these levels is that this level that I drew here, you can see that the 200 is sitting just tucked in underneath here at about 48 cents. So you can see how important this level here is at in the 50 to 55 cent range. So we're gonna have to just wait and see from a weekly perspective how this is going to play out. But ultimately, when you look at these fibs, like I said, they're very, very strong. I think once a lot of this starts to play off, we will start to see movement back up, and these fibs will once again come back into play, right? Like the 0.5 and the 6 and the 7/8, sorry, the 618 and the 786. So like these levels are definitely going to come back into play at some point as price action moves forward into the future. I'm just going to go over my notes, make sure I got everything here. Yep, that. All right, so we're going to jump now into the daily. I'm just going to remove everything that I had done here. And what we're going to look at here is, the channel breakdown. And I'm just going to zoom in, and we'll go over the fibs in a sec. But the channel breakdown, which I talked about the other day, we had a level around like this, right about there, tucked in at about 78 cents. And I think price action when I made my previous video was around 82 cents. And I was saying that if we break this level, we're going to start to dip a little lower. And sure enough, we got that dump. Price action dipped all the way back into the low 70s, which was in confluence with this range right here. And I had mentioned this range. I'll just map it in out here. So you can see where that comes from, right? Resistance, breakout, throwback, support. Now we've come back, and guess what? We've retested that support again, quickly got bought back up. So this is a very key level. This is kind of where it comes from, right? So, we can use the past to help us understand what's going to happen in the future, right? That's what support and resistance is all about, and how we can utilize price action from the past to help us. So price action, however, has broken that trend line at about 78 cents. And right now we're trading underneath it. And, there are these smaller wicks that are happening on the dailies. So even today, price action is being bought back up every time it gets driven back down. And today, I think it went back into the low 70s again. And now we're back in the mid to high 70s. So, it's a very interesting thing to see what we're going to be dealing with here, right? So is price action going to break above, or is it going to continue trending lower? And, I mentioned the other day too, right? The ADMA is providing that downtrend support. You can see how price action is just like crawling across this line. So, we could see price action consolidate in this range between, 80 cents and, 70 cents. Now, the thing is if we start to get that breakdown of 70 cents, this is where that depth fill of that wick spike comes in play, right? Because I mentioned before that there is this level of support right off that wick right here, right? Which comes from around this range. And ultimately, our key support is sitting in this range right down here. And I'll just map it in like this, right? So we can see that from this view, blow it up a little bit so you can see what I'm talking about. We can see that from this level here, this is where that wick comes down, right? And here is our demand zone baseline bottom range of support sitting right around that 50 cent range. So now that we kind of understand where these levels are from a bearish perspective, it's not to say that price action is going to go there. It's just being aware of where things are. So if you're trying to put some stinky bids in or lowball bids, whatever you want to call them, these are some great levels to start putting those bids in, right? You could be putting them in the 60 cent range and also in that 50 cent range. And who knows, if we start to see an epic sell-off again and, have a wick like this could send price down here and your order would presumably get filled. Great place to, take a bet that things are going to work out with support because they have in the past, right? We've seen support hold up here. So there's a very, very good chance that it will hold up again if price action were to come down here. Now, just zooming back in here to where we currently are, into this structure, from looking at the moving averages, I mentioned before we have that bearish, death cross that formed. However, it is a laggard indicator. We've already seen price action, completely, drop from the previous highs all the way back down. So we already know that the move is in. The question is how much more is left in the tank for this move to go down, and are the bulls going to be able to buy up the price action and send this, back up and complete the reversal above these moving averages. But right now, on the daily, things are looking heavily bearish, just because look at how these MAs are positioned, right? They're all positioned in that 4 o'clock position with the 200 positioned in the 3 o'clock position. So, everything's really, really bearish right now. From my perspective, sentiment isn't very good. I'm not sure what's going to turn this around. I don't know what the catalyst is going to be, but if I look at it from just merely a price perspective, once again, 78, 80 cents is our key resistance range. We have a clear support here at 70 cents, and then there's another baseline support here at 60, and then our ultimate baseline support is literally hanging at 50 cents. So keep those levels in mind. All right, so the next thing I want to talk about is I just want to show us the fib levels. I'm just going to delete everything I just did here so you can see what I'm talking about. If I were to start mapping out some fibs, and I'm just going to keep using the daily for a sec, just so you get a visual of how valuable these fib levels can be. If I just map the anchor from our swing low to our swing high, what I want to show you is kind of where we are within this structure, this fractal structure that we're currently in, that started back in September, and once again, where we currently are. So we have our anchor here from July, anchored to our swing high up here. And I'm using a wick to wick here. I could easily also, go wick to body, but I'll just stay wick to wick for now, just because to prove the points. But as price action has started to retrace, what's very, very interesting is, we're starting to see how low price action could go. And, we're getting some support right off that 786 fib again. And, this is very, very key level to understand. And, it does measure back to that level I talked about, which is 70 cents, right? Which came from here. And I said, 70 cents is our support at the moment. If that breaks, we're dipping back down to the 60-cent range. And if that breaks, we're dipping back down to 50 cents. So, we keep it simple like that. And you can see where the confluence lies. But the 786 fib is holding very, 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 very strong right now. Even if, we get that kind of that swing that occurred here, price actually got bought back up. So even though we're trading lower than, 78 to 80 cents, that resistance line, we're now below that support. So it's now resistance. We can see the 786 is giving us confluence in that 70 cent range. And this is why I wanted to draw this up for everybody so you can see. Now, if we are able to get a successful, move from here where, price action can start to, reclaim some ground and start to turn it around, the question then turns into, okay, well, how high can things go, right? So we already examined how low things can go, but now we're going to examine how high things can go. And I'm just going to move off to the weekly chart again, just get a little bit easier to read these charts using it this way. And I like to use fractal measurements where I measure, the moves, right? These fractal moves, right? The depth of these moves. Usually, when you get dumps in these prices, these dumps can lead to good pumps, right? The depth coming down can lead to significant move up on the flip side. And what I mean by that is, if I were to just measure this fractal, for instance, we can use Fibonacci to start. What I could do is anchor the top here and just have an overextension and anchor it all the way to the bottom. So I'm looking at, our anchored top here and our anchored bottom here to give us our extension. What we can start to see is that, we can start to get an idea of where our key levels are going to be sitting once price action starts to round off. Right now, I have no idea how long it's going to take to round off, but as you can see, we have our 1.618 at about $3. We have the 2 fib sitting at about 3.75, and we know our previous all-time high is about 3.85. So, this is a very, very good sign to tell us, where the key levels are going to be when price action moves up. Now, what I also like to do is utilize those fractals, like I said, the fractal calculations. So, from one perspective, I could measure the move from, this scan wick here to, I call it scan wick, but, the wick that's down here to the wick top here, for instance, can, provide us with some data and some information of, a possible range, right? So we can see that, this measures up to about 2.24, very, very close to 1.272 to a certain extent, right? It's not too far away. We could see that overextension with a wick tap up here. So, within this range here of 20 cents, this is, a very, very key level I'd be looking at, in the medium term. I can also measure the base here to the top here to determine where we're going to see price action move as well. And, when I measure it this way, this puts us, pretty much just around that 1.786 range, right? You can see it right here, 1.76. So we know that, 3.36 is probably going to be another key level to be considering once we get that reversal and things start to move up. So these are very key levels to consider right now. Just immediately looking at this, I'm just going to put a little square box there, and I'll put another square box here. Okay. And, you can mark those levels, if you want. The other thing is, when we measure from the anchored low to the anchored high here, we can also measure that in and of itself as well. And, that will put us pretty much at the 2 fib, right? That's how we use this measure box. But you can see right here, it's putting us right to the 2 fib. So this is another full extended move of where price action go. Now, I'm using this top wick here, but if I were to be a lot more conservative, this is where things get really, really interesting, because you can see that using that same anchored low, but I use the candle top body here, price action actually gets us right in that pocket range, just below $3. And $3, when you think about it, is a very key psychological level, and it conveniently sitting in confluence with the golden ratio at 1.618. So, I would also map that as another profit-taking, area for this coin. And I'm just going to use this circle, the circle tool here, just to mark it as another key level. So we're going to wait and see what happens with XRP. We've already talked about how low things can go, and now we've talked about, in terms of the medium-term time frame, kind of the targets I'd be eyeing, right? These areas here, these are great profit-taking areas. Now, if we're looking at it from a much larger scale, I think price action takes us significantly higher. The 2.618 takes us just under $5. I think the 4.236 goes up to about 7, and that's just measuring this fractal here. So I'm not going to measure the whole fractal. I'm just measuring this current fractal that we currently have, and just to assess what we have in the medium-term time frame. There's no point looking beyond that at this point, because just the state of the market. So once again, things aren't looking epically bad. I mean, we've already gone through a lot of bad price action. Once again, it's just about understanding these levels, trying to stay level-headed, have a strategy, right? Just because price action is going down, it's not the end of the world. It just means have a plan. Understand, if you didn't sell at these previous pumps that happened here, if you're holding XRP, understand what your plan is, right? Are you going to be buying more at these levels, right? Like we talked about, right? If we get past the 70-cent range, are you going to be buying more at 60 cents? Understand why you're buying at 60 cents, right? What we ideally don't want to see, though, is a full breakdown of that 60 to 50 cent range. I think if we start to lose that level, obviously that would be very, very, very bearish, because we would have broken through key horizontal support, multiple times, right? I can show you just based off these fibs that, we had a key level of support right here, right? And we can see that price action had resistance here, broke down, came above, had the throwback to this range. However, ultimately broke below, had the pullback successful here, and now we're having that follow through. So there is a chance that, based off that follow through, how I was using the fractals to measure up, I can also use those same fractals to measure down, right? So, I mean, if I had things measuring on the way down from this perspective, this basically starts to put price back into that range I talked about, which is the 50-cent range, right? And that's basically using the top here, the candle body, being a little more conservative, using our support line here, right, which got tagged on the underside here for the pullback. And if this move measures out, this should take the price action down to the lower support range again. So it is something to be aware of. Like I said, we can kind of calculate these things and use as many tools as we can to fit whatever bias we want. But the reality is, stay as emotionless as possible. I like the 80-20 rule, where I am 20% emotional and 80% more logical about things. But when things start to happen in a bearish way, I understand why they're happening in a bearish way. It's like I understand what I'm looking for, and this is kind of what I want to show everybody here today on the video, is just understand what levels you're looking for and what that means, right? So, I mean, we're already seeing key momentum here from classical charting patterns. You have a breakdown, you have the pullback that's successful, and now price action is going down. This is showing me that there is a very good chance that we're coming back down to that 60 to 50 cent range, like just based off of this. It's a good bet to take that it could go lower. But if you're a buyer, this is probably a good area to have your buys now set, right? That's what you can do, because there's nothing left to do except wait. You don't want to be trading, in the middle of this mess. You want to be always buying, at the bottom ranges, right, at support levels, And you want to be skimming your profits when things start to get to these resistance levels, right? Like the 618 ratio here. These are great places to take profit. So that's our video for today. Big thank you to everybody for sticking around and watching this thing. Take care, everyone. Stay safe, stay healthy. Let's be wealthy. All the best.